Good afternoon and welcome to our Financial Advisor Forum this Wednesday, October 23rd. I'm Greg Greenberg, live from the street. Now, you may have seen a full-page advertisement in today's Wall Street Journal promoting Puerto Rico and its ability to pay its bills. It's not something you normally see. It even had a letter from Governor Alejandro Padilla saying that Puerto Rico will do everything necessary to honor all its commitments. Puerto Rico, municipal bonds that is, are very popular with investors since they are triple tax-free. Here to talk about what's going on down there and what it means for the entire muni market is Dawn Mangerson from McDonnell Investment Management. Welcome, Dawn.
Thank you.
Now, you probably saw this particular letter in the Wall Street Journal today. What was your view when you read it?
Well, Puerto Rico, I think, is very sincere in wanting to pay their bills. We don't own any Puerto Rico in the fund or our firm in general. But we are following it because it is big news, and people will see that and they'll think that this is evident in all of munis, but there are 50,000 different municipalities, and it will affect the market in general, but not individuals.
And which are your favorite munis right now? I know you have 50,000 municipalities, but is there a particular sector or type of bond that you like the best right now? GOs, revenues, do you like them from New York? Are you avoiding Chicago? Tell me how you're choosing them.
We are looking at higher quality munis right now because there's not a lot of spread in the market, meaning that you're not getting paid to take on a lot of additional risk. So we're not particular about whether it's a revenue or a GO, as long as when you look at the credit from the bottom up, their ability to pay is good.
Every now and then, though, when you look at a spread like in Puerto Rico, which I think went to 10% recently, or Chicago or Detroit, when do you actually jump in and take that risk?
Well, at McDonnell, we typically stay out of credits that have negative momentum. So even though Puerto Rico might be trading better, if we don't think the credit fundamentals are improving, we're not going to buy it.
So right now, are munis as a whole, I know it's hard to speak about munis as a whole because once again, there are so many different issues out there.
Right.
Are they overpriced or underpriced? Are they expensive or cheap compared to Treasuries? Because Treasuries 2.5% on the 10-year this week after that bad jobs number last week.
Oh, I'm so glad you asked that because actually munis are very attractively priced right now. For example, you can buy a muni bond at 100% or more of Treasuries in 10 years. So say about a 3% yield in 10 years. And that equates to a taxable equivalent yield of about 5% if you use the highest tax bracket.
That said, when you look at the Russell, that's up 30% this year, and the S&P's up 23%. So are you seeing people say, you know something, I got to sell my munis, I got to chase stocks while I can?
I think people are doing that, and I would be reluctant to say that you should sell all your munis and go into the more glamorous equity market, because what munis do is they act as a diversifier in your overall portfolio, and they basically have zero correlation to the equity market. So when your equities do start going back down, that doesn't necessarily mean that's going to happen with munis.
And then finally, is there anything seasonable about buying munis? Is there a particular part of the calendar which is better to buy, better to sell? Because we're heading into the holiday season. I'm not sure. What is it about munis? Do you just buy them whenever?
There is some seasonality in munis, and it's mostly due to the coupon payments. So your income stream, a lot of that gets paid in June and July, so a lot of cash comes into the market during that period. So you're going to have to pay up a little bit more for your munis. And then at the end of the year, a lot of issuers like to get their bonds to market by the end of the year. So you might see a little bit more supply, which is going to make munis cheaper.
And then one more question, finally. Is it better to buy individual bonds, bond funds? I know you manage a bond fund. What about closed-end funds? Because a lot of people who own closed-end muni funds, there's some leverage in there. They took a little bit of a hit this summer when there was tapering talk. What's the best way to buy muni funds?
I think it depends on the individual, but the easiest way I think would be mutual funds because there's easy ways to get in and out. They're very liquid and you get diversification right away. You can also buy individual bonds if you have enough to invest to get proper diversification.
All right, thanks a lot, Dawn Mangerson.
You're welcome.
And thank you for watching After Hours Action. Please come back later when I talk to Managed Futures expert fund manager Tom Florence. In the meantime, I'm Greg Greenberg from the Street. Thanks for watching.